Alright, let's dive into what's happening on Wall Street right now. Markets are treading water after a shaky run, with stock futures barely budging. After a string of tech-driven losses, the Dow's up just a touch, and the S&P 500 and Nasdaq 100 are showing only modest gains. But don't let those numbers fool you. It's a cautious mood out there. The tech sector is really feeling the pressure. Nvidia's stock slipped 2% just before its earnings report, which has everyone questioning whether the AI boom is all it's cracked up to be. Apple, Tesla, and Oracle, they're all down too. Even chip stocks as a group took a hit. Some analysts say this could be a buying opportunity for the brave, especially for anyone with faith in the long-term power of AI. But for now, most investors are holding their breath. Despite the rough patch, there are still some bright spots. The labor market's cooling off a bit, inflation's inching lower, and that's got a few Wall Street pros betting on a year-end rally. September is usually a tough month for stocks, but a lot of folks are still hopeful things will pick up as we head into the holidays. The key, strong company earnings and a steady AI sector could be the fuel for a rebound. But it's not all about tech. Economic numbers are sending mixed signals. Jobless claims dropped more than expected, which shows the labor market's still hanging tough. On top of that, GDP for the last quarter jumped a solid 3.8%, way better than anyone predicted. You'd think that would be all good news, but here's the catch. Strong data like that makes it less likely the Federal Reserve will cut interest rates soon. And right now, investors are watching every Fed move like hawks. The next big thing to watch, the Personal Consumption Expenditures Index, basically, one of the Fed's favorite inflation metrics. That report could decide if rates go up, down, or stay put. With Fed policymakers divided and a recent federal court ruling shaking up tariffs, uncertainty is high. Investors are hungry for clarity, but for now, it's a waiting game. On the corporate side, there's plenty of action. James Hardie Industries jumped after strong earnings. Kraft Heinz dropped after announcing a split, and PepsiCo climbed thanks to a big investment from Elliott Management. Intel soared almost 10% on news of a possible Apple deal, but analysts are skeptical about anything long-term there. Meanwhile, IBM picked up steam with advances in quantum computing, and Lithium Americas surged. Klarna's making moves for a US IPO. Commodities, gold and silver are up, with gold even hitting record highs as investors rush for safety. Oil prices are climbing too, while Bitcoin and other cryptos are sinking right along with the stock market. So, what's the takeaway? The markets are wobbling, tech is under pressure, and everyone's waiting for that next big signal from the Fed. If you're investing, now's the time to stay sharp, pay attention to the data, and get ready to make your move when the picture gets clearer.